All right. Good afternoon, everybody. Good afternoon, all you magnanimous melon heads of the world. The Dow Jones Industrial Average has fallen more than 1,000 points in a single trading session, and you know what that means. It is time for a spontaneous live stream supplementing the morning show today, because we have a lot of developments. A lot has happened since we last spoke this morning. As a matter of fact, it was a very busy day. First off, the trade war is raging. There was not a lot of headlines on the trading war, at least not a lot of big headlines. Like there was no backpedaling on tariffs. There was no carve outs for this industry, or my buddy gave me this much money to a pack, or came to an expensive dinner and so his company is exempt. None of that today. But there was a lot of international developments. A lot of countries are maybe not quite taking sides yet, but kind of suggesting that they might, or at the very least taking advantage of this trade war to score some good deals for themselves, namely India. In the headlines quite a bit today is India. Now, look, India is just sitting back, enjoying the show while the West and the East fights and goes to war or doesn't go to war. India was a big beneficiary of the whole sanctions on Russia thing. And, oh, we kicked them out of SWIFT and they're not allowed to sell their oil. India says, no problem, I'll buy it. Why not? India has no dog in that fight, or no horse in that race, whatever metaphor you want to use there. And India is today getting in on some of the action, saying, oh, jetliners, sure. Tariffs on steel, sure, no problem. Also hosting J.D. Vance this week. I wonder what's going to come out of that. Can't help but remember that threat that China made about anybody who cuts a deal with the U.S., and there might be consequences. Oh, look out for the paper dragon. So that's going on. We got a lot to talk about the trade war. We also have to talk about the AI bubble. Big news in the AI bubble today. And I think because of all the stuff going on with the Fed and all the trade war and the tariff talk, this one may be sneaking under the radar a little bit. But there was huge news from Amazon today regarding that AI mania. It's a big one, guys. And I am going to have to eat some crow here at the end of the show because I got this one wrong. So stick around for the end of the show if you want to see Jack admit he was wrong about something. Not something that happens often. I'm just going to say I don't do that very much. But the big story today, the top one, is the Trump-Powell feud. Or at least that's the one the press wants you to focus on the most. And, you know, look, I have mixed feelings about this Trump-Powell feud. There's a lot going on one side that I really don't like. There's a lot going on the other side that I really don't like. And at the same time, if we're going to have this fight, maybe, just maybe, we come out the other side of it better. But I think neither side is going to like the result of it. Now, let's talk about what happened with this Trump-Powell feud today. All right, Jay Powell and the Donald going at it, which, by the way, that's pretty much just the Donald going at it, and Jay Powell's kind of sitting back and just, well, we are duly committed to our dual mandate of price stability and, you know, all the stuff that Powell usually says. But keep in mind here, guys, where we are at. There has been a game of chicken between the Federal Reserve and the Treasury, or the executive branch, you could say. Trump wants his trade war. Trump wants to reshore manufacturing. Trump wants a lot of things. The Federal Reserve wants a lot of things. None of it is what Trump wants. All right. The two are diametrically opposed. And last week and the week before that, the Fed made perfectly clear they will not come to Trump's aid in this trade war. You want a 50 basis point rate cut right before the election to make your economy look a little shinier than it was before? No problem. Oh, you know what? You want me to monetize some bad debt to bail out corporate? No problem. Go to bat for the country? Oh, no. Oh, no. Independence. Independence is such a big thing. Now, look, I don't want the Fed to be a political instrument, but let's talk about what's actually happened today. All right. Trump is out with another rant on Truth Social, as he's apt to do. Here's what he had to say today. This was posted not too long ago. Preemptive cuts in interest rates are being called for by many. Who are these many? I don't know. I'm sure not calling for them. With energy costs way down, food prices, including Biden's egg disaster. Okay, bird flu was a really Biden thing, whatever. Substantially lower, and most other things, he quotes things there, trending down, there is virtually no inflation. Okay. Okay, we'll put this back up in a second. Virtually no inflation? No. Inflation has not touched the Fed's arbitrary 2% target in freaking 5 years. All right. So this whole virtually no inflation, there's inflation. It may be not as bad as it was in 2022, but it's still there. And any inflation right now sucks for the people who are still struggling with the inflation we had under the last guy. That being said, let's carry on here. Where was he? Okay, with these costs trending so nicely downward, just what I predicted they would do, there can almost be no inflation, but there can be a slowing of the economy unless Mr. Too Late, a major loser, lowers interest rates now. Europe has already lowered 7 times, referring to the European Central Bank, and they have lowered 7 times in a row. Powell has always been too late, except when it came to the election period when he lowered in order to help sleepy Joe Biden, later Kamala, get elected. How did that work out? Okay, so let's look past all of the typical Trump style there, right? That this is the degree of eloquence we have come to expect from POTUS. All right, so Sleepy Joe, Too Late is his new nickname for Powell, very much loser, whatever he said. What is he saying? Trump wants Powell to cut rates to help him with his trade war. He wants lower interest rates to juice the economy to offset the decline in financial assets that's been caused by his trade war. All right. And I don't think that is an overtly political statement. That is pretty much the game as it stands. The Fed doesn't want to do that. Why would the Fed come to Trump's rescue here? Nothing the Fed stands for, at least secretly stands for, they'll never admit it out in the public, but nothing that the Fed stands for is helped by this trade war. This trade war flies in the face of everything the Fed is trying to do. Look, guys, I said this in the morning stream today. The Federal Reserve is a private institution, not a government body. It is owned by its member banks, and its member banks are owned by the richest, most powerful people in the freaking world. These people have made themselves insanely wealthy off of the destruction of the American middle class and the outsourcing of American manufacturing. Why would they ever help in the trade war? I mean, I don't think Trump honestly believes Powell's going to help here. I think he's just kind of lining Powell up to be the scapegoat for the decline in financial assets that we're all watching in real time. That's why we're all here. He's trying to set up Powell to take the blame for it. And look, Powell deserves plenty of blame for it, but not all. This bubble predates Trump, but Trump is the pin that's popping it. So the blame is shared, in my opinion. That being said, it is insane to expect the Fed to come to the rescue here. The Fed doesn't want the trade war to work. The Fed doesn't want manufacturing to come back to the United States. The Fed is owned by the people who have gotten ridiculously wealthy on the destruction of American manufacturing and the gutting of the American middle class. The Fed wants more control, not less. They'll never help Trump here. But Trump needs to deflect anger. People are looking at their 401ks. People are looking at their IRAs. Look, even some diehard Republicans that I know, people I know personally, people I know professionally, have straight up said, I didn't vote for this. Trump is going to take a hit in the polls here, and it's going to be big. And he needs somebody to blame. Trump is his scapegoat, or Powell is his scapegoat. And again, I don't think Powell's innocent here. I think the Federal Reserve is awful. Now, look, he's going to try to fire Powell. Can he fire Powell? Yeah, he can. It's hard. But everybody's saying, oh, the president can't fire the Fed chair Powell. He's not allowed to by law. That is not correct. The Federal Reserve Act of 1913, I think, or 1912, whenever it was actually passed, the Federal Reserve Act does allow for the president to fire the chairman of the Federal Reserve or any Federal Reserve governor for cause. But here's the problem. Nobody has ever said what for cause means. It's not defined anywhere, which means President Trump tomorrow could come out and say, Chair Powell, you're fired, which means this goes to court because obviously some circuit judge from the 11th district of who cares is going to come out and say, oh, this is a presidential overreach and a violation of the separation of powers and the Fed is an independent body, and we go to court. And here's the thing. The market really doesn't want this. And we've come close to this. There have been other independent regulatory bodies where presidents or senators have been very critical of these people. They've always resigned before going to trial in one of these for-cause cases because they're trying to preserve the institution. We could actually end up with the Federal Reserve on trial here. How freaking crazy would that be? Don't threaten me with a good time. Now, that would be incredibly destructive for financial markets. Are you kidding me? If there's actually a case in court where the executive branch is making their case about all the ways the Federal Reserve screwed up in the last few years, clear your freaking schedule. If that happens, it's going to take a while. And then the Federal Reserve has to somehow defend the indefensible actions it's taken in the last few years. Can you imagine what the stock market would do up and down every day if a trial like that were ever to happen? Oh my God, make some popcorn. That could happen. Or Powell could just resign if they push that. Now, if Powell resigns, that might be viewed as acquiescing to President Trump. And well, I'm not comfortable with President Trump just arbitrarily appointing a dove so he can get lower rates and money printer go burr, more monetary debasement in order to offset the financial collapse caused by the trade war. No, don't do that. Take the medicine, as your own words, President Trump. But guys, I mean, it really looks like we're heading this way. I mean, putting Jerome Powell on trial for cause and then wow, can you just imagine the discovery? Imagine opening the books. Imagine FOIA'd emails, everything going on inside the Federal Reserve and its 400 PhDs. This is actually starting to sound like a lot of fun. Scary, but don't threaten me with a good time. And so we will be donning the tinfoil hat for the duration of the live stream today. Now, look, I'm going to leave you with this on this topic. And again, I don't want President Trump to appoint a dove. I don't want that. It's too much power for the president to have. Jerome Powell has too much power for anyone to have. I don't think the Fed should exist. So the reason why I'm excited about the prospect of the Fed going on trial potentially, as we try to argue what for cause means and can he or won't he or can he or can he, I would leave you with this quote from Thomas Jefferson, the founding fathers of our country. I believe that banking institutions are more dangerous to our liberties than standing armies. If the American people ever allow private banks to control the issue of their currency, first by inflation, then by deflation, the banks and corporations that will grow up around the banks will deprive the people of all property until their children wake up homeless on a continent their fathers conquered. Thomas Jefferson, in 1802, more than 100 years before the Federal Reserve was created, the children will wake up homeless on a continent their fathers have conquered. Isn't that exactly where we're headed right now? Have you seen the 10 cities in every city in America right now? Is that not been caused by the blowout of home prices and the excess financialization that has been largely enabled by the Federal Reserve and its member banks? Is the doomsday scenario Thomas Jefferson laid out not playing out exactly how he said it would in freaking 1802? Some of this stuff doesn't care about the internet or AI or the automobile or technology change. Some of this stuff is timeless. Jefferson nailed that one. Why don't we shrink my big million of a head and let's see what went on in this market today. It was a loud one, guys, but the markets did catch a little bit of a bid into the close there. You notice we got a little ramp at the end here. All right. It wasn't a pure sell-off. Market closed just off the lows of the day. The S&P, 5,158, down 124 points, 2.36% lower on the day. These are 5-minute candles, by the way. The Dow ended up closing down 1,123 points at 38,087, down almost 2.9%, also just off the lows of the day. And the NASDAQ leading the way. Did the NASDAQ lead? No, the Dow actually led. That's interesting. The NASDAQ was down 2.55%. Again, catching a bit into the close, down 415 points, 15,870 for the NASDAQ. Something I want to point out on the long-term chart here. Let's set this back to daily candles and zoom out a little bit. We came down today. If you look at where the very bottom was today, about 15,600, it was just below the low from August 5th. We ended up right down here at one point, just below where we bottomed at August 5th. So a little bit of technical support there on that August 5th low. That's interesting. Now the Dixie ended up recovering a little bit, but still down 100 basis points on the day. We talked all about this morning. Sharply weaker dollar here 98.38. It was down more than that today, so a little bit of a recovery. But the Sell America trade is kind of taking over here. Money leaving the States, heading to Europe, into Japan, into gold, and even Bitcoin today. So we have the Sell Out America trade being replaced by the Sell America trade. Tell me which one you prefer. I don't really know here. Looking over at the USD JPY chart, the yen, it looks like the yen calmed down throughout the course of the day here, about where we were this morning, 140.88, below those August 5th lows. Keep an eye on that yen carry trade. When Japan wakes up tonight, we'll see if that one resumes lower. And the bond market, guys, the long end of the yield curve was noisy today. The short end was actually pretty quiet, but look at the sell-off in those 10s, 20s, and 30s today. We got the 30-year yield, 4.905. That's higher by 9.5 points here. Remember, yields moving higher. That's bond prices moving lower. There was a lot of selling of U.S. Treasury bonds again. The 20-year, 4.942, higher by 10.5 points. The 10-year, 4.406, higher by almost 8 points. The 2 years at 3.762, that was actually down 3.5 points. And the 1 month at 4.308, up 1 point and change. Looking over at the commodities board, another ripping day for gold here. 3,421 for spot gold. That's up $93, almost $94, 2.8% higher. The June gold contracts were higher by $103.80. I like the shiny. But silver getting clobbered here. Not getting clobbered. I mean, silver was up. But look at the move in gold, almost $100. And meanwhile, silver is up a measly dime. 0.31%, $32.69 for silver. Put a pin in that. We're going to be back to gold and silver in just a second. Just to round out the commodities, we've got copper lower by a penny. It was sharply higher this morning. Platinum down by 1%. Palladium down 2.8%. And crude oil was off by another 2% today, $62.70 for June WTI futures. Now, let's take a look at this chart here. This is the gold to silver ratio shown in blue. And then we've got the price of silver shown in purple. Guys, just note we got two different axes here. A little bit of a chart crime, I know, when you mess with the axes, but I got to make it fit on one screen. Now, what I want to point you out to is first, on the blue chart, look at where we're at in the gold to silver ratio, 104.64. It is climbing again, levels we have not seen since those highs in 2020. All right, so the gold to silver ratio, historically, it's been like closer to 30. It comes out of the ground at closer to 9. For the last couple of years, we've been kind of hovering around in the 80s. Now we are blowing out to 104. This is the monetary draw of gold, driving gold prices higher, while silver has that industrial demand holding it down as they worry about global trade slowing. So a big blowout in the gold to silver ratio is telling us there is an economic crisis on the horizon, or that we're in one already. And that's exactly what we had in March of 2020. Now, the interesting thing coming out of that March of 2020 blowout in the gold to silver ratio, we did see the gold to silver ratio come down. Now, there's two ways that could happen. We could have the price of gold fall sharply. That could bring the gold to silver ratio down. That's what Michael Gayed has been calling for quite loudly in Michael Gayed style over the last couple of days. Or we could see what we had in 2020. We could see the price of silver rally disproportionately to gold and start to play catch up. And in 2020, after that March panic, silver went from about $12 an ounce to about $28, almost $29 an ounce in a span of just a couple of months. Either way, silver is looking yummy here at these levels. Bitcoin, meanwhile, gave back a little bit of its gains here. It went over 88,000 today. It actually very briefly went above the 200-day moving average. Could not hold those levels. A little bit of a bearish indicator there, getting rejected by that 200-day moving average. But still, Bitcoin is about $2,000 higher than it was yesterday, $87,161 as priced on Coinbase. And before we get too far into the trade war weeds, I want to say thank you so much to my man Alex, who says, still love the hat. You and me both, brother. I am working on a new merch vendor to handle the tinfoil hat demand, which is insane, by the way. It's insane. These things are like NVIDIA GPUs. I'm telling you guys, you'll be fighting the ladies off with a stick if you wear this thing out to the bar. Danger. Do not wear it to the bar. Thank you, Alex. Appreciate the good vibes, sir, and thank you for being a Melonhead for 14 months. M&J, also a Melonhead for 14 months. Thank you so much for everything you do for the channel. M&J says, we need more merch. Time for a new store. M&J, I will get you that Dirtbaggery t-shirt. I swear it. I swear I will get you that t-shirt one day. Thank you so much for your patience. Guys, there is a whole story behind that Dirtbaggery t-shirt. One day I'm going to tell that story. I'll probably make a video about it. It's pretty messed up. You ever make a t-shirt about financial fraud and accidentally find a whole bunch of financial fraud in the process? I hate when that happens. Yeah, that's the Dirtbaggery t-shirt. Thank you, M&J, for everything you do for the channel. Nashville Pasta Man, what's going on, brother? He says Trump knows Powell won't if he publicly tells him to. He's pounding Powell so he won't jump in. All right, so Trump just playing reverse psychology here? That's an interesting theory. He can get securities sell-off and blame Powell a twofer. So I think we're suggesting here the securities sell-off in order to get those lower rates that Trump wants and Bessent wants, along with the weaker dollar. Now, we've gotten the weaker dollar, we've gotten the sell-off in securities, but we're not getting those lower long-term rates because of that sell America trade, because of the money going back to Japan and Europe and to gold to a lesser extent. So, okay, that's an interesting theory. Trump playing reverse psychology. He keeps telling Powell to cut just so Powell won't cut. Look, I'm just delighted the Fed has finally learned to do nothing. They're doing nothing for the wrong reason, but at the very least, I think the Fed should do nothing. I don't want rate cuts to juice asset prices. Let the freaking home prices come down so millennials can buy a house for a change. I mean, it's ridiculous what they've done to entire generations. And look, Jefferson warned, our children will wake up homeless. Entire generations can't afford a house. It's kind of the same thing, maybe just a little bit lost in translation over the many centuries of history. Thank you, Pasta Man, for your support of the channel, brother. Appreciate that very much. All right, let's talk trade war here, guys. We got a lot going on in the trade war. It seemed like a quiet day on the trade front, but it really wasn't. First things first, India imposes a temporary tariff on some steel to stem cheap imports from China. You'd think this was a Trump headline, but it's not. This is Modi over in India. Tariffs on steel. India, the world's second biggest producer of crude steel, on Monday imposed a 12% tariff on some steel imports, locally known as a safeguard duty, to curb a surge in cheap shipments, primarily from China. So India not necessarily siding with the U.S. here, but they sure as heck aren't siding with China. A flood of Chinese steel in recent years has pushed some Indian mills to scale down operations and mull job cuts, and India is one of a number of countries to have contemplated actions to stem imports to protect local industry. India's steel minister, H.D. something I can't pronounce, said in a statement that the measure is aimed at protecting domestic steel manufacturers from the adverse impact of a surge of imports and will ensure fair competition in the market. This move will provide critical relief to domestic producers, especially small and medium-scale enterprises who have faced immense pressure from rising imports, he said. New Delhi's tariffs are primarily aimed at China, which was the second biggest exporter of steel to India, behind South Korea in 24 and 25. So India getting in on the metals tariffs. That is a notably Trumpian move, and here's India following suit. Now, we've got more news from India today. This is also interesting. Air India is keen to take Boeing jets refused by China Airlines. We talked on one of the morning live streams last week about how airliners was one of the areas the Chinese are targeting to try to retaliate against the U.S. The Chinese don't import much from the U.S., but one thing they do import a lot of is planes, and that's what they're targeting. And it seems India is like, well, I'll take them on the cheap, no problem, kind of like the Russian oil. Air India is looking to take Boeing planes rejected by Chinese carriers, people familiar with the matter said, joining the ranks of Asian airlines vying to benefit from the trade war between Washington and Beijing. The Tata Group-owned carrier, which urgently needs aircraft to expedite its revival, plans to approach Boeing about acquiring a number of jets the U.S. plane maker was readying for Chinese airlines before reciprocal tariffs thwarted the handovers, according to the people who are familiar with discussions at the Indian airline and didn't want to be identified because the information isn't public. Air India is also eager to take up slots for future deliveries should they become available, the people said. The carrier has benefited from China's pullback in the past. Through March, it had accepted 41 737 MAX jets, originally built for the Chinese airlines, whose deliveries were deferred, dating back to the model's 2019 groundings. Chinese airlines were told by the government not to accept Boeing aircraft, Bloomberg reported last week, after Beijing set reciprocal tariffs of up to 125% on U.S.-made goods. About 10 planes were being prepared for delivery at the time, and some 737 MAX jets in China have since been sent back to the U.S. They actually flew some of those planes all the way over there only to turn them around and fly them back to the States. Now turn them around again and send them to India, boys, because we got this trade war going on. The Indians are cashing in. Now the question is, are the Indians going to try to get these on the cheap here? Maybe Boeing's going to have to lower the price a little bit. We'll see what happens. Maybe that is a topic for discussion between the prime minister and the vice president, because J.D. Vance meets with Modi as India seeks a reprieve from tariffs. Now, this is kind of interesting politically here, guys, because Trump has kind of made J.D. Vance the point man on the trade war. And if I just imagine if you're like J.D. Vance's chief of staff, you're probably sitting there saying, oh, good. Kind of like when Biden made Kamala the border czar. It's like, we have this thing and it's probably not going to go really well, so we're going to attach your name to it. Good luck to you. Well, J.D. Vance is now in charge of the trade deal, and he's in India right now. Now, so far, look, the thing with the steel tariffs on China and the thing with the planes, maybe Vance is pulling this off. I don't know if this has anything to do with Vance's visit. But so far, India is probably placing themselves a little bit in the crosshairs of the Chinese here for some of those retaliatory tariffs that they were talking about. We covered that on the morning live stream. Now, let's talk about some things moving around in the world elsewhere in the trade war. Another area the Chinese are targeting is U.S. agriculture, another one of our big exports. From meat to grains, the trade war is a boon to Brazil and Argentina. Now, we're starting to see a lot of movement on this front. The Chinese have cut back on their agricultural imports from the U.S., in some cases eliminated them outright. And South America is winning here. So far, the only winners in the trade war are India, Argentina, and Brazil. That's interesting. Brazil and Argentina are emerging as early winners in the global trade war that's upending agriculture markets. Escalating tensions between the U.S. and China, the world's biggest supplier of consumer or farm products, respectively, have created an opening for the South American nations to ramp up exports of everything from meat to grains in a bid to seize global market share. The newest opportunity seems to be meat. U.S. President Trump's tariffs on 8 of America's top 10 beef buyers have already redrawn trade flows, raising exports of Brazilian beef to halal markets, including Algeria and Turkey. Japan, America's second largest beef client, is now in advanced talks to start buying cheaper meat from Brazil. And an economic slowdown triggered by the trade war will move other international beef buyers to shift purchases to lower-cost suppliers, especially Brazil. According to DataGrow market analysts, some guy named Jank, I can't pronounce him either. Sorry, guys, I don't get out much. So far, China's shift away from U.S. products is shaping up to be a major driver of Brazilian and Argentine exports. The Asian superpower in April ordered a huge amount of soybeans from Brazil, giving the country a leg up in its farming rivalry with the U.S., and recently reached a deal to restart poultry shipments from Argentina. Increasing shipments to Europe is a possibility, too, with talks for a trade deal between Mercosur, the South American trade bloc, and the European Union gaining momentum, according to Marcos Janks, senior professor of global agribusiness at INSPIR. Argentine sorghum producers may also benefit from higher prices since there aren't many alternative suppliers of the grain used in animal feed. China is the world's top buyer and the U.S. the top supplier. So China is targeting America's farmers. That's also Trump's base. So politically, a pointed argument there for the Chinese. Now, this is also probably one reason why, as we're hearing about spending cuts and tax arguments and all these big bills and the debt ceiling are in the pipeline in Congress. It's going to be a circus in Congress for the next couple of months, guys. One thing we're probably going to hear a lot about is they'll be trying to add some kind of agricultural subsidies or some kind of farm support into this legislation because America's farmers are in the crosshairs of this trade war. It's one of the few ways you can actually retaliate against the U.S. Now, another way the Chinese can retaliate, China stops imports of U.S. LNG amid trade war. Customs data shows this is probably something else that Vance and the Indians are going to be talking about this week. Oh, the Chinese don't want our LNG. I'm sure India will buy that along with the cheap Russian crude and the cheap planes from Boeing. Sure, why not? China's purchases of U.S. liquefied natural gas plunged to zero in March after a sharp decline in the previous 2 months as the trade war between the two biggest economies alters shipping routes. Overall, delivery of U.S. LNG shipments in the first quarter of 2025 fell by 70%, according to Chinese officials' custom data released on Sunday. The hiatus is the longest since the trade war triggered during President Trump's first tenure, when China didn't receive cargoes for about 400 days. Now, look, China has almost no domestic energy industry. They get no oil. They get no natural gas, for very little from themselves. If they're not going to buy LNG from the States, where are they going to get it from? Enter the UAE. This one also the today. China signs major LNG deals with the UAE to replace U.S. supply. State-owned China National Offshore Oil Corporation, or CNOOC, agreed on April 21st to a term deal to buy liquefied natural gas from Abu Dhabi National Oil Corp, the third supply contract the energy-rich West Asian nation has signed with Chinese buyers in recent days. CNOOC's Gas and Power Group agreed to a 5-year deal starting in 2026 to buy 500,000 metric tons of LNG annually, an industry source with knowledge of the deal told Reuters. Private Chinese firm ENN Natural Gas and Beijing-owned Zhenghua Oil each signed a term contract over the weekend to secure liquefied natural gas from ADNOC, the British news agency added. ENN's 15-year contract is the largest and will see the firm buy 1 million tons of LNG from Abu Dhabi annually starting in 2028. Chinese LNG buyers are seeking to resell U.S.-sourced LNG cargoes to avoid the new tariff costs imposed by Beijing and to secure new deals from other nations to replace the U.S. supply. Now, look, guys, this is where the trade war gets kind of silly, right? LNG is a big global pool. So it's kind of like the oil thing. When you just say we're not going to buy any LNG from the United States, okay, that's fine. You're going to buy LNG from another country, and then whoever was buying LNG from that country is now just going to buy their LNG from the United States. It's just a silly game of tit for tat. Somebody else, probably India, is going to end up buying their LNG from the U.S. instead of Abu Dhabi now, because the Abu Dhabi gas got a little more expensive. The U.S. LNG got a little cheaper, and the arbitrage will close. It's kind of stupid, but hey, this is trade wars, guys. Trade wars are messy. All that's going to end up happening is the mileage these tankers go is going to get a little bit longer, I guess. But LNG, planes, grains, or planes, grains, and automobiles, as I said, maybe that's the new name for this trade war, John Candy, FTW. But this is going to get pretty messy here, guys. Now, this is another way that the Chinese could hit back at us, and they are not pulling any punches here. China retreats from U.S. private equity investments also this morning, according to the Financial Times here. Now, here they're probably going after our financial system, definitely going after our financial system, possibly our banks here. This is now becoming a risk to our banks. China's state-backed funds are pulling back from investing in the funds of U.S. headquartered private capital firms amid an escalating trade war between the world's two biggest economies, the Financial Times reported on Monday. Some of the Chinese funds are also seeking to be excluded from investments in U.S. companies made by private equity firms based elsewhere, the report said, which cited 7 private equity executives with knowledge of the matter. So not only are they not investing in U.S. private equity funds, they're not investing in foreign private equity funds that are invested in U.S. companies. So they're trying to drive a wedge between investors in other parts of the world and U.S. private equity. Now, this is very interesting, guys. Look, private equity, I can't stand private equity. They're some of the worst people that the country has to offer. So I will shed no tears for private equity here. They can stand to lose a few. Let's just put it that way. That being said, this is now getting very risky because remember the story this morning we were talking about Yale selling $6 billion of their private equity portfolio. Harvard probably about to do the same. Private equity, already a very illiquid market that's been tap dancing through a minefield to avoid price discovery. Now you've got Chinese divestiture to add on top of that. Private equity is a big problem. Now, thank God our banks have not invested in private equity, right? Oh, no, they just loaned them huge amounts of money so that they could take that money and then go buy those private equity investments. So actually, yes, our banks are, by extension, through loans, invested in private equity, and this could actually turn into a huge counterparty risk. And I tell you, if they end up bailing out private equity firms, I am going to be writing a strongly worded letter to somebody because it's probably going to happen here, guys. I mean, we've watched the M2 money supply explode over the last year and a half. It's up by like $1.2 trillion. That's all private credit expansion that's been happening. And our banks have been loaning the money to these private equity and private credit firms so that they can loan it to these zombie companies, which means our banking system is exposed, even though they're like, oh, don't worry, we don't have any risky allocations or we're not investing in risky securities anymore. Oh, yes, you are. You're just doing it and calling it something else. And the last thing on this trade war, we got this one today. This is from Taishu Zhang on X. And what they're doing here is they're posting a screenshot from the Chinese tax ministry here, or the Chinese finance ministry. This is pretty interesting. So official Chinese Q1 GDP estimates came in at 5.4% growth. Sorry. Yeah. Things that didn't happen for 1,000, Alex. That was above expectations. A few days after they say 5.4% GDP growth, official Chinese tax revenue comes in and shows a 3.5% decline. And you might be asking yourself, how do you get a 3.5% decline in tax revenue during a 5.4% period of economic growth? You can't, is how. Which means China's economic statistics are just fake. Look, our guys do it too. I mean, a lot of our statistics, like the CPI is a joke. And like we fake plenty of our numbers and we use fiscal policy and reckless government spending to inflate GDP. But in China, they take that to a whole different level. The statistics are laughable. Of course, they haven't had 5.4% GDP growth amid a real estate collapse in China and now a trade war. China is just so insecure that they're just constantly puffing up their chest to act like this big mighty dragon, even though they're technically in a recession. I think China's probably been in a recession since 2021 and the beginning of the collapse of Evergrande. And then I don't read Mandarin, let's put it this way. I did run this image through a couple of Google Translate functions, and it does support what this Twitter user is saying about the 3.5% decline in tax revenue. So I told you guys, there was a lot going on in the trade war today. I mean, a lot going on there. We didn't get any like backtrack or anything like that. No big changes in the policy, no big breakthrough, no big deals announced yet. But India playing both sides of the fence, India capitalizing on the opportunities, South America capitalizing on the opportunities, American farmers getting targeted, American LNG and private equity getting targeted. So, it was a messy, messy day. The Trump-Powell spat got most of the coverage, but a lot happened in this trade war today. Now, another thing that got lost in all the hysteria about Trump and Powell and can he fire him or can't he is this story we got from Wall Street Engine on Twitter today. This is a big one. The AI bubble continues to burst. Wells Fargo and TD Cowen flag AWS data center leasing pause. And guys, I told you I was going to eat some crow here, and I'm going to eat some crow because I was bragging about how I was like, I called it. Microsoft would be first to blink in the great game of CapEx chicken. As big tech, the Mag 7 companies are all in this contest to see who can burn the biggest pile of their own money in the ashes, and whoever comes to their senses first loses. I was right about Microsoft being first, but I said Google would probably be second. And I was wrong. It was Amazon. And that news broke today. Any other day, this would have been the top story in finance. This is huge. Both banks say Amazon AWS has hit pause on some colo leasing deals, mainly international. By the way, colo leasing deals, that's referring to co-location. Basically a shared data center where they rent it out to many other users, kind of like what CoreWeave does. CoreWeave does co-location. All right, now they're saying mainly international, but not just international. Cohen notes hyperscale demand is cooling a bit, especially in Europe, with Amazon slightly pulling back on U.S. co-location activity too. Wells heard from multiple sources that AWS is stepping back from ongoing leasing talks, mirroring what's been seen from Microsoft lately. And they post a screenshot here of the data centers. Industry sources have pointed to a pause in new colo deals for AWS. It's not clear how widespread the pause is at this point, but points to some moderating hyperscale leasing near term from the two largest hyperscalers, Microsoft and AWS. Guys, it ain't just Microsoft anymore. You better believe this bubble is popping in real time. We can all see it happening. You can add AWS to the list. That includes Microsoft. And, well, that's two. That's two of the big hyperscalers, the two biggest. Now, it's interesting that it was these colo leases, all right, because we have had some news on Amazon's colo leases or colocation in recent days. This one from April 11th. This is a story that didn't get a lot of coverage. I even missed this one, but I went looking today because of this Amazon story. U.S. regulators deny rehearing on co-located Amazon data center energy pact. This is a big one because this overlaps with my former neighborhood, the nuclear industry. U.S. energy regulators this week denied a request to reconsider a decision that blocked an Amazon data center connected directly to a Talon Energy nuclear plant in Pennsylvania from ramping up its power use, government filings show. Now, a nuclear plant in Pennsylvania, this is not that 3 Mile Island deal for Microsoft, but it's very similar. Talon Energy owns the Susquehanna nuclear plant that's also in Pennsylvania, and Amazon had cut a deal to take almost half of the power from the Susquehanna nuclear site for themselves in order to power their data center. Now, FERC, that's the Federal Energy Regulatory Commission, they're like the grid operators, and the Northeast is a what's the term? A deregulated grid. You're not allowed, or you're supposed to not be allowed, to sell your power directly to end users from the power plants. In a deregulated grid like we have here in the Northeast, the generators have to sell their power into the grid, and then the grid sells their power to the individual consumers. All right, now that was supposed to like foster competition and, make for a healthier price discovery market. And what happened with Constellation in 3 Mile Island is they just basically threw out all that law and said, nope, we're going to sell directly to Microsoft for 3 Mile Island. And then Talon Energy got in on the same thing, tried to do the same with Amazon, and FERC said, not fair. Big Tech's race to secure massive amounts of electricity to fuel its AI data centers has led to unprecedented arrangements with power companies, including new types of so-called co-located deals where the giant computer warehouses are powered right from the power source. The arrangements have promised to speed up the technology's industry artificial intelligence expansion by eliminating wait times to connect to the broader grid, and have propelled company shares of independent power companies like Talon on the prospect of signing multiple co-located power deals. But members of the Federal Energy Regulatory Commission have voiced concern about how the Amazon data center, which diverts electricity from the broader grid, might affect power reliability and cost for the general public. In November, FERC rejected Talon's request to increase power supplied to the Amazon data center beyond 300 megawatts. When Talon Energy sold the data center to Amazon, the company said the facility could use almost 1,000 megawatts of energy supplied directly from Talon's Susquehanna nuclear facility. That's half of what Susquehanna puts out. Susquehanna is about 2,500 megawatts total here. It's a dual unit site. FERC on Thursday denied a request for a rehearing on the matter. Talon, which has separately asked a U.S. appeals court to weigh FERC's rejection, said it wasn't surprised by the decision. The ruling now allows us to pursue our appeal rights on the merits in the Fifth Circuit, Talon spokesman Taryn Williams said on Friday. So the grid operator is saying you don't get to buy up all this power on the cheap and drive up power costs for everybody else in the process. You are no better than anybody else. You got to buy your juice from the grid like everybody else does. And Talon says, well, we'll take you to court. We're going to fight that. Why? Because our stupid chatbot needs more power, and the plebs will just have to pay more to heat their homes in order to enable that. Well, FERC said no. And so I'm wondering, does this have something to do with Amazon's decision to shrink some of its co-location data centers? I mean, Amazon's cutting back on these deals. This is exactly what FERC just rejected. Now, they're saying it's mainly international. They're talking about a lot of these colo data centers in Europe, but also here domestically in the U.S., so I wonder if this Talon deal is at risk now, since they might have to pay more for their power. And remember, this is, I think, what drove Microsoft to scale back their data centers. Back in December, we had Satya Nadella made a very important statement. I jumped all over it, and I said, guys, this is big. When Satya Nadella said in an interview that he wasn't chip constrained anymore, he was power constrained. And that set off in this whole chain of events where all of a sudden Microsoft is pulling back on their data center projects while sticking like glue to their 80 billion CapEx promise. I think because Microsoft is spending all that money on power plants and not on more data centers. Now we've got Amazon, after getting rejected for more power, is saying, well, we'll have to scale back our data centers. And there's one company that, besides NVIDIA, right? NVIDIA didn't like this news today. Let's see. What did they close at? NVIDIA closed down 4.5% today. $96.91. NVIDIA not doing so well here, guys. Ever since that death cross, this one keeps selling off. But hey, try explaining that to the NVIDIA bros. They'll just tell you insane demand is insane and all that other stuff. But look at CoreWeave today. Let's refresh this one because CoreWeave is like kind of the king of the colo data center. That's what they do. CoreWeave built overflow capacity for anybody who doesn't want to buy their data center compute from Microsoft or from AWS. They go to CoreWeave. Man, CoreWeave had a rough day, down 9.4%, $5 below the IPO price. Whatever happened to that big anchor that we heard so much about? Weren't they going to anchor CoreWeave at $40 a share? Didn't NVIDIA promise like a $250 million? And, hey, you scratch my anchors, says Rodney Dangerfield. Yeah, back below. I tell you, the underwriters are supposed to prop this thing up. NVIDIA said they were going to prop this thing up. It hasn't even been a month. Not going so well for that CoreWeave IPO. Guys, if you haven't seen my coverage on CoreWeave, let me just tell you, this company is a landmine, a ticking time bomb. They are guaranteed to go belly up at some point. Not if, but when it happens. And Magnetar Capital is going to make money hand over fist when it happens. Magnetar gets paid, whether CoreWeave goes up or down. Magnetar will eventually take everything. So if you bought this company, if you ignored everything I tried to tell you, you are holding Magnetar's bags, and it will be worthless someday. But you know what? Try explaining that to the AI bros. It's just a waste of time, guys. There's really no. I mean, I was talking to one of these guys, one of these AI investor accounts on Twitter last night, and he's talking about how there's no real evidence that NVIDIA is selling their chips to China. And like, other than all of the evidence, there's no evidence. I mean, there's literally videos of guys in China saying, this is my illegal H100 GPU from NVIDIA. So if a guy in China saying, look at my illegal GPU isn't proof of illegal GPUs in China, what passes for proof? If videos showing warehouses full of GPUs in China is not enough proof that NVIDIA is illegally selling their GPUs in China, what is? If the fact that 20% of their revenue comes from Singapore, a country the size of one city, and Singapore revenue magically increases 500% within a couple of weeks of the AI export controls going into effect. Oh, if only there was some evidence. Other than the mountain of freaking evidence that's sitting on your face, there's no evidence of these GPUs being sold to China. But you can't explain these things to these people. You cannot get in the way of number go up. All right. The AI investor is not your typical investor. The AI bro, the NVIDIA bro, is not your typical stock market investor. All right. It's a different animal entirely. And when you're talking about these different animals, you got to go to an animal expert for something like this. Like a guy like this guy, like my man David Attenborough. David, what do you think about the AI bros? Well, the AI bro is the most peculiar specimen. See how he puffs his chest and performs an awkward dance to celebrate what he thinks is victory. But he's mistaken his accounting fraud for his own business acumen. Quietly fearing the inevitable, he spends what's left of his meager gains on spray-tan formula in hopes of attracting a mate. But the female will have none of it. For nobody special, I'm David Attenborough. Oh, David, thank you so much for coming out of retirement to explain the peculiar, fickle beast that is the AI bro. Because they don't make any sense to me, that's for sure. I just tried to point out that, hey, you guys are investing in accounting fraud. You might want to be careful. And they're like, oh, throw tomatoes at this guy. I'm like, well, just trying to save you some money, guys. Sorry. So yeah, that was David Attenborough trying to explain what's going on with the AI bubble. So look, guys, a lot happened today. 1,100 points lower. Trump and Powell going back and forth at each other. And look, I hope both lose. I hope nobody wins, but I just hope the Fed actually goes on trial. I think that would be great for the country to actually put the Federal Reserve in the public eye and actually have people watching a court case while the Fed tries to explain what they do, and a prosecutor actually tears into them about what the net effect of their actions have been. Don't threaten me with a good time. I would love to see it. That being said, I don't want Trump to just arbitrarily put a dove in charge to prop up his stock market to support his trade war. I don't want to see that either. I just want to see no Fed. But hey, it's the 2020s. Jack doesn't get what Jack wants. The trade war, a lot happened in the trade war. Keep an eye on India, man. The more the West and the East fights, the more India just sits it out, and they quietly get bigger and stronger. Emerging superpower India, and of course, more bad news for the AI bubble and the AI bros, as explained by the one and only David Attenborough. Guys, I just want to say thank you so much for joining us for yet another afternoon live stream. We've been doing a couple of these throughout this market crash, and something tells me there's going to be more. A lot could happen between now and tomorrow morning, so come on back tomorrow morning for my weekly morning update live, not my weekly. Thank you very much for the super chats and the supported channel. Thank you also to my magnanimous melon heads on YouTube and Patreon. You guys rock. Links down below to all that good stuff, should you feel so inclined. We're also on Spotify. Check us out there. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.